It is time to look at the VIX and really see where it's headed so that we can better navigate what's going on in the broad market, individual stocks, and more. So before I dive into this messy looking chart of the VIX and update it with you, important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. So here's my chart of the VIX that, like I said, it's a little bit messy because I have not changed it or updated it with you here in quite some time. So the last time I did a video like this on the VIX was September 21st. So that's that gray vertical line. So I'm going to show you what you would do to clean up a chart you haven't looked at in a while if you want to do it the way an expert does. So if you're new here, I'm Hema Reddy, and I use price, momentum, and market timing to boost my trading and that of my trading tribe. And what I'm looking at right now is a daily chart of the VIX. So every candle is representing one day of price action. All right, so first I'm going to kind of zoom in on the recent price action. These horizontal lines, blue is for resistance. So at the time that I was writing this, those were the levels for the VIX to trade up through in order to gain traction, and pink is for support. So you can see that these lines have been traded through and we need to reevaluate. So I always just take off everything except for one. That kind of resets me, and then I can recycle that tool in my charts. So since the low that came in on September 21st, which was at 25.25, I'm going to anchor that as support, there has been a run up, a pullback, that's another area of support. Now this set of lows has three different levels, so we'll pick the lowest one, and a run up again. All of this coinciding with or contained by this high at 34.88. All right, so that's the first thing I'm going to do to kind of clean things up. The other is removing any trend lines that are not really serving or adding value, or adjusting the way they are presented so that they have a different meaning. So I'm going to change this blue line to black just to make it easier to distinguish from the other elements of the chart. I'm going to also make it a little thinner, and I'm going to make it a dashed or dotted line. That way I know it's a trend line that was traded through. But can you guys see how we came back to that in early October and it's holding now as support in the VIX? That's the value of keeping trend lines even if they're traded through, but just updating their formatting so you don't interpret them the same way as a solid trend line that's never been violated. Okay. Notice that this red trend line, okay, so this is taking us from the February or March 8th high to the May 2nd high here, and that has been very useful for resistance, along with this pink trend line, which I'm just going to change just to differentiate colors. We'll make that one orange, okay? And that one has been useful because we traded outside of it, but then the markets came back up and held it again. This longer term green one, not quite as useful, but not something you need to get rid of. So now we have greater emphasis on trend lines that are continuing to impact market action, but we still have the leftover details of the trend lines that are of the past. You can make them more transparent if you like, okay? All right, so now that we've cleaned up the chart a little bit, let's also look at the RSI power zones down below. So it's my favorite momentum indicator here. I want you to notice how with the recent action since the late part of September, we are basically back at recent peaks on the RSI power zones. So if you're using the RSI power zones in your trading, whether you're practicing, simulating, or trading live, it's not just about, buy on green, sell on red. It's not just a quick bouncing around between the zones like a game of Frogger, okay? It's about looking at how the RSI is behaving compared to its history on that particular security. Now, this is not the concept of relative strength. That's completely separate. What I'm talking about here is if you are using the RSI and you're using it on specific markets, then look at how it's behaved in the recent past. On a 6-month chart, or on a daily chart, I should say, I would look back at least 6 months, if not a year. All right, so that's another tip for you. All right, so now we have this intersection here, and notice how the intersection of these two trend lines end up calling a turning point. That can happen a lot with trend line intersections. And what I'm seeing here is that there's room for the VIX to go in either direction, but the broader market, the SPY, in my latest deep dive on it, is suggesting a greater chance of weakening into October 26th to start. And then from there, there may be further downside. We have to see what happens on that date. So I'm just going to plop out here October 26th for a reference, okay? This is not a forecast for the VIX, but it's a forecast for the SPY. So I'm just going to change the color, but just have that perspective. Okay, so now that I've mapped all this out, what do I do to navigate trading with the VIX, and what do I recommend for you? Well, while the VIX is beneath, or while the market's beneath the October 5th high, but the VIX is above the October 5th low, I think there's more likely room for it to run up higher here, okay? And that would be a return to this 34.88, and then really it's looking to make its way back more towards this 37.52 and the high that's this spike high here from January at 38.94. That to me is the much more likely trajectory of the VIX, okay? It might consolidate still in here and then make its way through these levels over coming weeks, okay? Not a day or two. Now, since I don't have a crystal ball, I have to account for, well, what if that's wrong, right? What if the VIX goes the other way? What if it breaks below this 28.80 low? Well, then I already have my next platform here simply based on the concept of higher price lows. That's price with a capital P. I look at price lows and price highs as bar, price, or swing. There are three types. And that might also coincide with other additional information. For example, if we continue to come down off this 34.88 high and we use a retracement tool. So I use retracements the way Gann did in terms of looking at the division of a price range into eighths, not just into Fibonacci numbers. And you can see that there's this amazing zone, okay? 50% to 62.5. When a market, even the VIX, when it pulls back into that sort of area, there's a higher likelihood that that's actually going to hold. So between the 50% retracement at 27, the 62.5% retracement at 25.03, and I'm just going to move the label so it's easier to read, this support level at 25.55, all of that suggesting that there's a very big zone of support here in the VIX. So even if I'm wrong in the short term and we don't continue to trade higher in the VIX until October 26th, I think that if it falls lower, it's going to really have a hard time pushing below these lows. And notice that that could possibly coincide with the RSI power zones coming back to the bull support power zone. So my favorite time to watch the VIX is like this, when it's kind of going nowhere and nobody's looking at it. That's when you can get the cleanest insight and analysis and then navigate your trading from there. So I hope that helps. Keep in mind this October 26th is not written in stone. I do not have a crystal ball. I don't have some, interstellar creature somewhere telling me when markets turn. Sometimes it might feel like it because with my years of practice, my forecasts can be pretty accurate, but trade this based on your techniques and methods, but just consider this on top of that. And we'll see what unfolds. All right, so remember to subscribe, like, comment down below, share any insights you got from this video, join my tribe if you haven't already, and I'll catch you on the inside.